So you are seeing my YouTube channel, Learn Accounting with Sir Haris, and we are basically solving a question of O-level accounting. The topic is depreciation, and this topic, depreciation, usually comes in the question, and students used to find it difficult in the paper. So that question we are going to solve that has come in October-November 2023. What is new in this question? October-November 2023. So the new thing in this question is that we have reducing balance method along with asset sold is also given. Financial year is also normal. There is a normal financial year. Means that financial year will not start from 1st January or ends at 31st December. It starts from during the year and ends at maybe 1st July till 30th June, or any 12-month period can be there. But one thing which has never come in our O-level questions, that is that the question belongs to annual basis. So if it is going to be on month-to-month basis, that is going to be very difficult question. But currently, month-to-month basis can come in the exam, but currently the question is basically coming regarding reducing balance method with assets sold with abnormal financial year, but annual basis, not monthly basis. But in A levels, we used to find questions of monthly basis on routine basis. So let's start. Saria owns a business selling ladies' clothing. She maintains a system of double entry bookkeeping. The following occurred during September 2020. Purchased a motor vehicle on credit from Sharp Motors 6350. So the entry will be, because he wants us to pass the general entries actually. So motor vehicle is going to be debit with 6350, and Sharp Motor is going to be credit with 6350. So motor vehicle debit and Sharp Motor credit. Motor vehicle asset, increase in asset debit, and Sharp Motors credit, say trade payable. So increase in liability credit. Next, Ruhi, a customer, was declared bankrupt owing Saria 1200. The debt is to be written off. So Ruhi was our trade receivable, but now he has declared bankrupt, and the amount should be written off as bad debts because we are basically Saria owing to Saria 1200. And now this has been become irrecoverable debts. So we will pass the entry irrecoverable debt debit with 1200, and credit is the trade receivable. But when the name is given, which is Ruhi, you will use the name of the trade receivable. So irrecoverable debt debit as an expense, and Ruhi decrease in trade receivable is going to be credited because asset decrease will be credit. But we will not use the name trade receivable, we will use the name Ruhi because the name is being given in the question. Next, let's see. Next part is basically regarding the depreciation. Saria is preparing a financial statement from the year ended 30th September. It means that our financial year will start from 1st October and ends at 30th September 2020, or 19 to 20. He provided the following information for fixture and fitting. Fixture and fitting at cost. Already there is a balance in the asset account 28,600, and these assets have already been depreciated, which is also given in the question with the name provision for depreciation 6185. January 31, sold fixture and received a check 1150. We have sold a sum of the fixture and we have received a check of 1150. The fixture had been purchased on 1st February 2018 for 1500. So it means that a fixture which was purchased on 1st February 2018 for 1500. So the fixture on January 31, the fixture which had been purchased on 1st February for 1500, which is the cost of that asset, after the use, that has been sold for 1150. When? On January 31. It means that we have used that asset in 18 and maybe in 19 because it has been sold in January on January 31. Next, March 31. On March 31, purchased a new fixture paying by check 3,500. Sharia policy is to provide depreciation on fixture and fitting at 10% per annum using the reducing balance method. Second, so there is a reducing balance method, depreciation rate is 10%. A full year depreciation is charged in the year of purchase, but none in the year of disposal. So we will calculate depreciation for the whole year when the asset is purchased, and no depreciation will be charged when the asset is sold. So this is annual basis. So this is how the question has become little easier. So I'll start with the fixture and fitting account. I will prepare the asset account first, which is the fixture and fitting account. So let's do that. We will prepare fixture and fitting, or you can say the asset account. I will write here 2019 till 20, the dollar sign. Over here again, I will write 2019 20 and the dollar sign. Now, we have been given on October 1 fixture and fitting at cost 28,600. So I will write here 110. On 110.19, the brought down is given in the asset account, that is 28,600. 28,600 cost of the asset has already been given in the question. There is already balance in the asset account. Next is in 2020 March 31, we have purchased a new fixture paying by check 3,500. So I will write here 31/3/20. Fixture is debited because of bank and the amount is 3,500. So that's it. Now I will go for the total of the debit side. We know that whenever an asset is sold, the cost of the asset is going to be credited in the fixture and fitting account. Asset account is debited with the cost and credited with the cost of the asset sold. Not at that price, at the net book value of the asset. No, we will credit it with the cost of the asset. When the asset is sold January 31 and the cost of that asset which has been sold is 1,500. So I will give a credit on 31/1/20 with the name disposal. And I will credit it with the cost of the asset. Now, at the end of the year, I have to write the carried down, and my year will end on 39/20, and I will go with the carried down. So can you please tell me the total first, and then the carried down? The total is going to be 32,100, and then I will write the carried down also 32,100, and the carried down is going to be how much? That is 30,600. Okay, I will write here 30,600. This carried down will become the brought down of the next year with 30,600. Okay. So next I'm going to prepare the provision for depreciation account. Let's prepare the provision for depreciation account. I will do like this. Provision for depreciation account is a liability account, but I have to write 2019 till 20. I will go with the dollar sign 2019 till 20. I will write here the dollar sign also. So first I will go with the brought down on 1/10 October 19. I will write the brought down on the credit side because we have the asset which cost us 28,600 has already been depreciated by how much in the previous years, that is 6,185. Depreciation is given already 6,185. The cost is given and the depreciation, the brought down, is also given 6,185. Now I will go for the calculation of the 39. At the end of the year, the asset is going to be depreciated. The entry will be profit and loss account debit, and provision for depreciation credit. Provision for depreciation is going to be credited because of profit and loss account. So I will write like this over here. And here I will write that the asset is sold on 31/1. And I will write disposal over here. And at the end, obviously, I have to write the carried down, whatever it is going to be. And that will become the brought down of the next year. So why you leave the places and you don't write the amounts? Because you can solve the question whatever the way you like, but I want to solve the questions in a way in which you find it more easier, because I will do the easier stuff first, and the difficult part of the question I will solve it at the end, so that you might be more familiar with the question, that at least you should be able to do 90% of the part of the question on your own. So let's see now. Now I am going to prepare the fixture and fitting disposal account. Set disposal account. So I will write here fixture and fitting those disposal account, $sign. Here I will write $sign. Again, I can pass the entries because I have requested you again and again to memorize the entries for the disposal. I will do that again. First entry is for the disposal is fixture disposal account debit, and fixture account is going to be credit with the cost of the asset sold. So the cost of the asset sold is 1,500. It is given in the question. So fixture account is credit over here with 1,500 because of disposal. And disposal account is going to be debited with 1,500 because of the fixture. Right? Next entry we used to pass is provision for depreciation to fixture disposal account. This entry we will pass with the total depreciation of the asset sold from the date of purchase till the date of sale. Provision for depreciation is a liability account, decrease in liability debit. Fixture disposal account is going to be credit. But I will pass this entry with the total depreciation on the asset sold from the date of purchase till the date of sale. So let's see. The asset which has been sold, that has been purchased on 1st February 2018 for 1,500. It means that from 1st February 2018, we have used that asset till January 31, and then it has been sold for 1150. So let's calculate the depreciation on this asset. 1,500 is the cost on 1/2/18. So I have used that asset from 1st February 18 till 39/18. Year has become closed. Year has passed. Because from 1st February, we have purchased the asset, but our financial year ends at 30th September. Because our financial year starts from October and ends at September. Although I have used this asset for how many months? February, March, April, May, June, July, August, September, 8 months. But because this is annual basis, I will calculate depreciation for the whole year, 1,500 into 10%, that is 150. And how you have entered that? That is the 10% rate. And reducing balance method is given. So 1,500 is the cost of the asset. Here it is being written. So I will charge the depreciation for the whole year, 1,500 into 10%, 150. Again, the asset has been used from 1/10/2018 till 39/2019. Again, the whole year has passed. I have to charge depreciation on this asset, but because we have reducing balance method, so 1,500 minus 150, the amount is 1,350, which is the net book value, and 10% of this is going to be 135. So the total depreciation, again, the asset is going to use, just for the understanding purpose, 19 till 31/1/20. But in this year, I will not calculate depreciation because from 19 to 20, the asset has been sold. from October 19 till September 20. During that year, it has been sold on 31st January. So in the year of asset sold, in the year in which the asset is sold, we will not charge any depreciation. So the total depreciation on the asset sold is 285. I will pass the entry with the total depreciation on the asset sold from the date of purchase till the date of sale, provision for depreciation debit, and fixture disposal credit. Now you can see that provision for depreciation is going to be debited with 285. I will write here because of disposal on 31st January, date of sale, and fixture disposal is going to be credited with 285 because of provision for depreciation. Obviously, two-way effect will be there. Then the last entry is that what amount we have received through the sale of that asset, that is 1150, received a check. So bank to fixture disposal account 1150, and fixture disposal is going to be credited. Yes, entries usually required in the question comes in the question. So fixture disposal is going to be credit because of bank. Now I will go for the total. If debit side is heavier, we are going to have a loss. If credit side is heavier, we are going to have a profit. So it is clearly stated that debit side is more than the credit side. So 1500, and I will subtract 1500, the credit side from debit side. 1500 minus 285 minus 1150. So 65 is going to be the loss, and that will be written on the credit side with the name profit and loss account 65. So we are done with the fixed disposal account. And now we just need to calculate the charge for the year to find the carried down, because we have already written past all the entries and we have posted all the accounts also. Now I am going to, this is a separate working actually. This is a separate working. Disposal key working, that is separate. And this is the working of charge for the year, or you can say current year depreciation. It has certain steps. First step is this: calculate depreciation on the newly purchased asset. So the asset which we have newly purchased is 3,500, and the rate of depreciation on that asset is 10%. Although it has been purchased on 31st March, but because annual basis is given, so you will calculate for the whole year, that is 350. Next step is calculate depreciation on the asset sold. Only in case of month-to-month basis, you will not calculate depreciation, because month-to-month basis is there, and this asset we will not calculate because we are going for annual basis. So we will not calculate any depreciation on the asset sold. This 350 is also calculated for the whole year. Last step we will do, calculate depreciation on the existing assets. Existing assets means जो पहले से पड़े हुए, और वो कितने के हैं? 28,600 is the existing assets. So we need to calculate depreciation on the existing assets for the whole year, but under reducing balance month. So now we have to use a formula which we have discussed yesterday also. What we will do, cost of existing asset minus cost of asset sold, then depreciation on existing assets minus depreciation on assets sold. Then we'll take the difference of the two amounts and we'll multiply it with 10% to find the depreciation charge for the on the existing assets. उसकी एंट्री भी होती है प्रॉफिट एंड लॉस अकाउंट टू प्रोविजन फॉर डेप्रिसिएशन. Whatever, यहाँ तक any problem you can ask me. You can ask me any problem if you have. Please inform me. I am ready to listen to you. Yes, any problem? You can say that this question is going to be the most difficult question of the chapter of depreciation regarding O levels. So Charge for the year means that we are going to go for the steps. First step, calculate depreciation on the newly purchased asset. We are done with that. Second step, calculate depreciation on the asset sold. We are done with that. Last step, calculate depreciation on the existing assets. So let's do that. Cost of existing asset is 28,600 minus cost of asset sold, that is 1,500. So the answer is going to be 28,600 minus 1,500, that is 27,100. Then cost of, depreciation on the existing asset is 6,185. And I will subtract total depreciation on the asset sold from this, which is 285. We have already calculated that. So the depreciation on existing assets which are still in use, which are still going to be used in the current year for the whole year. So we need to charge depreciation on those assets. तो सर वो दिए तो हुए हैं हमारे पास 27,100 के. No, that is the cost of the existing assets. अगर हमारा कॉस्ट स्ट्रेट लाइन मेथड होता, ओरिजिनल कॉस्ट मेथड होता, तो फिर मैं 27,100 पे 10% निकाल लेता. यहाँ पे ऐसा नहीं कर सकती because we have been given reducing balance method. So 6,185 minus existing depreciation minus 285, because that depreciation is included in this, that is going to be how much? 5,900. So 27,100 minus 5,900, that is the book value of the existing assets on which you need to charge depreciation. So how much is going to be the book value, if you can tell me? G. That is going to be how much? 27,100 minus 5,900 will be having, yes. How much is the amount? That is
21,200.
Yes. So 21,200. I will calculate depreciation at the rate of 10%. That is 2,120 plus 350. Because current year depreciation means all those assets which are still in use in the current year. We need to charge depreciation. We need to calculate depreciation on all those assets. 350 plus 2,120. It will become 2470 is the total depreciation. We'll pass the entry with 2470, profit and loss account to provision for depreciation, and then we'll go for the total, and we'll subtract the the debit side to find the carry down. Though this entry is at least not required, but I will pass the entry just for that. Maybe somehow or the other you will memorize these entries and it will help me all the way through. What is the total of the credit side? And we'll subtract the debit side also, 8,655 and 8,655 minus 285. The carried down, it is going to be how much? So the carried down is going to be 8,370, and that is the carried down. We'll write over here 8,370, and that will become the brought down also for the next year, 8,370. So we are done with that. If you want to write it in the balance sheet, I can tell you that how you will write it in the balance sheet, though it is not required, but I'm just telling you. Cost at the end is 30,600. Here it is written. Depreciation at the end is 8,370, and you will subtract 30,600 minus 8,370. You will get the net book value. If the question will ask you that how you will write the non-current asset section in the statement of financial position, you will do this. Cost at the end, which is 30,600, brought down le lo aakar ke, minus depreciation at the end, which is 8,370. You will subtract the cost with the depreciation. What is the amount? 30,600 minus 8,370. What is the answer? Which is the net book value of the assets, and that is going to be 22,22230. Yes. So you can write that also if required. So this is how we are done with this question. If you have any problem, you can ask me, and you can take the pick also, whatever required. So the calculation of the disposal is separate, and charge for the year or the calculation of current year depreciation is separate, but both are part of the same question. That's true. So let's see that what is the requirement. Fixture and fitting account, provision for depreciation, disposal. We are done with that. Saria is considering forming a partnership with her friend, Amy, who runs a similar business. Advise Saria whether or not he should form a partnership with Amy. Just give an answer with two advantage and two disadvantage of forming a partnership with Amy. So number one, his expertise and skill and expertise will be enjoyed by Saria. More capital will be introduced in the business. Competition will reduce, obviously. Then losses will be shared. And disadvantage is that profit needs to be shared. There can be conflict between the partners. Disagreement between the partners can happen. And secondly, he was the sole owner of the business. Decision making will become difficult. Decision making will get slow because he has to take interest of Emmy also, because he is a partner now. So these are the things which matter. And you can write anything because you have studied business, so you can do easily whatever you want to write. So any problem you can ask me. If there is any question, please ask me. Thank you. So remember that this is the last question of depreciation which we have done. Now you can do the homework which I have given you. One question I have given from October, November 24, 23 variant. October, November 24, 23 variant. There is a question of depreciation. I want you to solve that. And one question I have given you, this one, which I'm showing you again. This is May, June 18, 23. So these are the two questions I have given. Other questions have already been given to you. So thank you very much. Allah Hafiz.